Hello and welcome to The Note, which is coming to you today on location from Columbia Business School in New York. The topic is a very important one. What do the rich do with their money? How does the way the rich treat their money, or the ultra-rich, differ from the way other people do? Now, there has been some very interesting research done here on how the ultra-rich families actually treated their portfolios during the crisis, and it produces a lot of very surprising results. With me now to discuss this is Columbia Business School Professor Enrichetta Ravina. Enrichetta, thank you very much for letting us film here at the school. Tell me who the people that you've been studying are. How rich were they and what did they do with their money?
So the people in our sample are US households with an average net worth of $90 million. It ranges between 10 million to more than $280 million. And we followed them over time from 2000 to 2009. We see the way they act in their portfolios during the boom and then subsequently during the crisis.
Okay, and if we could take a look at one of the charts from your research, it seems to suggest, without being too Marxist about it, that the rich get richer. Is that fair enough?
That's what we find. Thanks to their investment in alternatives like hedge funds, private equity and angel investing, and thanks to rebalancing activity in their stock portfolios, the rich experience an increase in their wealth, which is quite amazing during the boom period of 2005 to 2008.
Yeah, so let's talk a little bit more about exactly how their behavior differs from the normal. Do they rebalance any more? Are they more disciplined about their asset allocation than everybody else? And do they make more use of those extra risk, extra illiquidity products that other people really just cannot touch?
The rich are definitely more disciplined in the way they diversify their portfolio, they rebalance when investment opportunities are changing, and they also can take advantage of the advice of many people working for them. As a result, they are able to rebalance their portfolio. They have access to investments that we don't usually have access to, like private equity, hedge funds, and angel investing, and they leverage this asset to make a higher return than the average.
Now, let's take a look at, we're showing you a chart now which is fascinating, which shows where they allocated their asset in terms of asset classes throughout that decade period from 2000 to 2009. So apart from the high proportion to alternatives, one of the other interesting things is that the amount that they put to cash increases as the crisis approaches. Were the rich any better able to deal with the crisis than most people?
Well, what we find is that some of the rich were actually quite good at dealing with the crisis. If you rank the rich based on their wealth, the top decile, the richest of the rich in our sample, are actually going into cash in the third quarter of 2007 at the onset of the financial crisis when the commercial paper market freezes. Right. So they get up to 50% into cash and they're able to safeguard a lot of their wealth doing this. The rest of the rich, however, are just like all of us. They froze, did nothing, and their portfolio fell quite substantially.
Do they use advisors more than most people, and are they more inclined to make direct investments in stocks rather than hold mutual funds or ETFs than others?
We find that on average, these wealthy individuals in our sample have between 7 and 8 advisors. And
7 and 8?
7 and 8. And by advisors, we mean registered investment advisors, family offices, wealth management, private wealth management in banks. All these type of advisors are included in our sample. We also find that during the crisis, the number of advisors, maybe due to scandals like Madoff's and other, increases. So these people make heavy use of advisors, tend to allocate a portion of their money to each advisor, and they diversify. They don't have advisor communicate with each other, and they seem to want to diversify in advisor risks when they face certain scandals like the Madoff scandal.
Okay.
We've also found that there is a huge degree of dispersion in the fees that these wealthy people pay for their advisors. So if we control for performance, certain wealthy individuals pay much more for their advisors than others.
Okay, thank you very much indeed, Enrichetta. This is a fascinating research that you've done. I suppose the things that interest me most of all, first of all, that most rich people didn't handle the crisis any better than anyone else, that they do seem to be able to use their, in normal times, that they do seem to be able to use their advantages quite effectively, And finally, though, my great impression from this research is that it would be a great job to be a financial advisor to somebody really wealthy.